Okay, folks, you're looking at Friday's close, Friday, August the 23rd, 2019. You're looking at the market close. You see that the Dow Jones lost about 600 points or 2.4%. S&P 500 lost about 2.6%. NASDAQ and small caps were 3 and 3.25% loss. So we did take a nice little hit today, but we didn't lose as much as everybody else. So the way we were positioned on Friday is we were 50% Harbor Capital. We were 50% Putnam Stable Value. So Harbor Capital is very similar to NASDAQ. So we lost close to 1.5% instead of 3% that the NASDAQ lost. So the reason why we were willing to take that gamble is because for the last week, the NASDAQ was very close to resistance. We figured that good news coming from the Fed would jump us above that resistance level, and then we will be heading into new all-time highs. So what happened is everything was looking good. The markets were heading up, and then China gets on and says, hey, we know that United States gave us a break on some of our tariffs, but even though they gave us a break on our tariffs, we're still going to impose tariffs on them. The markets start selling off, maybe 1.5%. Jerome Powell gets on there with the Fed chair. He gets on, talks about his meeting. The markets are positive at this point. I think they even got as high as 0.75 to 1% in the positive. So we thought we were out of the woods. Shortly after that, President Trump gets on and he's blaming President Powell for not doing enough to stimulate the economy. The markets start selling off a little bit. And then shortly after that, President Trump tweets that all American companies should look for alternative markets besides China. And that really sent the markets tumbling down. So even though we were right, our timing was a little bit off. So we did take a nice little hit. That just goes to show, even if everything lines up, it's heading in the right direction. There's a lot of things out of your control, especially when the markets are controlled by news, information, and with this last president, tweets. Who knew tweets would be so important? Okay, so the market sold off. They came down to a known resistance level or a support level. Markets sold down to a known support level. So for Monday, we're waiting to see if it holds that support level. Hopefully Sunday night, the markets will gap up. If they gap up, that gives us hope that it'll start heading back up at least temporarily, and we can try to make up about 1 to 1.5% of our losses from Friday. So that's what our hope is for Monday. With that being said, we are 100% Harbor Capital. So I had sent a text out to the group explaining, hey, if you stay in this trade for Monday, you have a chance to gain up to 2.5% or lose up to 5%, being in 100% Harbor Capital. Reason why we decided to take that trade is because we hit a known support level. The gap got filled on that support level, and we're hoping that it bounces a little bit, maybe 1 to 1.5% before it starts coming back down. As I look at charts, it's clear that the markets are coming down. So we think the next stop is going to be the June 5th levels. If it goes any further than that, they're going to be tested in December levels from 2018. And that'll be probably another 10% down, 10 to 15% down from where they currently are. Now for the 100% Harbor Capital, we're probably going to stay in that trade no more than 2 days if it doesn't start turning around and going positive. So we're willing to risk like 1 or 2%, and hopefully we make our 1.5 to 2% back that we lost on Friday. Okay, folks, thanks for watching the video. Remember what we're trying to do, and we're trying to show proof in these videos. I haven't seen anybody else in the world do it. In these videos, we're trying to teach people about market timing. We're trying to teach them how to do general investing, and we're trying to teach you how to think like a trader, to take as few losses as you can as a trader. So our strategy is long term. We've been doing it for a while. Long term, we beat the average person out by a few percentage points with our strategy. So right now, we're still a little bit behind everybody else. But as these markets start coming down, we'll be taking less losses and everybody else will be accumulating losses. And then we'll get closer to them. And then when we think the markets have bottomed, what we're going to do is we're going to try to ride Harbor Capital all the way up to the end of the year. So we're still looking, right now we're at a 9.3% return. We're still looking, hopefully, to gain a total of 25% return for the year by using that strategy. So like I said before, we don't say that you're going to get rich quick. We just teach people to think differently than everybody else. Don't follow the mainstream. Just think differently than everybody else. And over the long run, our strategy does work. So you will be having to watch videos for like a long time so we can show you how the strategy works. But it's better to move your stuff. Think about your moves. Think about the risk. Move them when you feel that it's right, than to just keep your money in there. Because a lot of people don't know they have choices to move their stuff around. All they know is the market goes up, the market goes down. So with that thinking, you're just going to take a lot of hits, and a lot of unnecessary hits at that. So thank you for being patient. We still got a long way to go. We still got a lot of trading days left in this year. We're hoping to be at a 25% or higher return for the year. And I'm feeling pretty optimistic about it. So like the videos, comment on the videos, share the videos, subscribe to the channel if you haven't subscribed. Later.